Hello and welcome to Crux Investor. We spoke earlier today to Danny Callow, CEO of African Gold Group, TSXV listed gold developer with assets in West Africa, Mali and Burkina Faso specifically. Now, if you want to hear our thoughts on the conversation or indeed the company itself, you can find that at cruxinvestor.com/club. Where you can also find detailed company reports, market commentary from experts from around the world on a variety of commodities and companies. There are training videos, and there are also summaries of other interviews that we've done to save you a little bit of time. There's also a large, thriving community of investors sharing their thoughts and ideas with each other. So go there and sign up on cruxinvestor.com/club. And of course, we'd love your thoughts and ideas too. So give us a like, leave your comments below, and if you want to see what we talked about, take a look in the description below. Danny, how you doing, sir?
Right, thanks. Great to be here. Thank you.
So where are you? I think I can guess.
I'm in sunny Cape Town. I think maybe a hint is behind me here. On the
wall. I saw that. Although you're not South African, you're English, so you're a traitor. I just want to say that.
No, I've got to say I'm the only person in the house that actually supports England. And to my detriment, in the last World Cup, it was a very soul-destroying day, as you can imagine.
That was a long day with many beers, I'm sure of it. So how have you ended up in South Africa?
Well, I guess when I finished a mining degree, there wasn't a whole lot of mining in England. So I thought better to go and cast my net further afield. So I ended up in South Africa initially. And I only intended to stay here for about 3 years, just to sort of finish up my training program with Gold Fields. And I never seemed to leave. So married a local South African and never left.
That was your first mistake, honestly. What were you thinking, man? Right, we should talk about mining. So a safer topic, right? I did the same thing. I married an English woman, never left. It's just a trap. It's a trap. Right, so we're going to talk to you today about African Gold Group. Now, you only joined towards the end of last year, so you're relatively new to it. But why don't you kick off, give us a 1-minute overview of the group, and then we'll pick it up from there.
Okay, great. Well, African Gold Group is a TSXV listed stock. It's a gold explorer and developer. We have assets in southern Mali and Burkina Faso. Most of our focus has been on the flagship Mali asset right now, where we've delivered 100,000 ounce definitive feasibility study at a very compelling operating cost and AISC number, and a very low capital number, which will give us some really, really good free cash flows out of there once we get going. Okay, you've done a lot of work since you arrived. We've done a lot of work trying to understand the company. And at 28 million market cap, I have to say, I'm pretty confused. So you're going to help me today, if you don't mind. You up for that? Sure.
Okay.
Yeah. Absolutely.
Okay. So why don't you tell us, where you are with the Mali asset in terms of maybe some of the numbers and where you've got to.
Okay, great. So I think what attracted me to the Mali asset was it's a relatively small exploration mining exploration concession, around 300 odd square kilometers. For me, it's a much more manageable type concession. We've only drilled about 4 kilometers of around 30 kilometers of shear zones identified on the property, and that's delineated this 2.3 million ounce measured, indicated and inferred resource. So for me, what I saw was a great opportunity for future expansion, life of mine extension. And when I came into the company, I had a look at all of the information. There'd been close to 150,000 meters of drilling done on this project. So it wasn't small exploration. There was a lot of exploration there, but nobody had really pulled this together, had a look at the data, understood the structural geology that we were looking at there. And it needed some logic to put it all together. And when we did put it all together, we saw that there was an opportunity to not only grow the phase one output, if you like, from the original thoughts of 50,000 ounces to 100,000 ounces, but we needed to do a little bit more work. So at the same time as trying to put all of this together, we got the drills going again. So last year we drilled about 11,500 meters of diamond drilling. That gave us a good understanding of the structural geology. We overlaid all of that, plus the mapping, plus the geophysics and everything, and it gave us a really good understanding of what this resource was going to look like. And at the same time, we also did all of the metallurgical test work again, because when I had a look at what had been done, we probably would have built the wrong plant had we gone ahead and not redone the test work. But what came out of that was a much more conventional West African gravity plus CIL oxide-only plant. Very straightforward, very, very cheap to build, very cheap to operate, and very good gold recoveries. And all of that pulled together into this definitive study over the last 12 months or so. So I think it's been a fairly hectic but very fulfilling journey to get to where we are. And I guess really the starting point, now we've delivered this study from July onwards, is how the hell do we get this thing moving now and built?
Okay, I need to kind of go through my checklist here, because you're an ex Glencore guy back in the day, right? So you're coming from corporate mining, but you've had a look at what you see on the ground here, and you think you've pieced it together in a slightly different way. So I'm interested in talking about your business plan in a second. Can I just talk about things a bit more obvious, like this company's been going on for a long time. It's had, I don't know how many versions of management it had, in the last 15 years, and clearly, even up until recently, heading in the wrong direction with plant design, etc. So you've come on board, taken a look at it. First thing you must have looked at is it's in Mali. Surely that's a problem.
Yeah, I think we did have a look at that, and I guess if you had to rank West African countries, Mali probably wouldn't be at the top of your checklist, but. I've worked in DRC and Zambia and many other African countries over many, many years, and I find West Africa very refreshing, including Mali. So, Mali, I guess that there would be some sort of discount applied to Mali. We've seen recently a military coup that's obviously made the government step down and a transitional government in place. Those things happen in West Africa, but I guess that, we're not the only company that's operating only in Mali, and we're not the only one that are probably having the same discount applied. So, for me, I think West Africa is one of the better regions that I've worked in Africa. I think it's progressive in terms of its mining code and the way it operates. And thankfully, we have a government that typically knows quite a bit about mining, because they've been doing it for a long time.
Okay, so the other thing about Mali is it's not about just political transition, which does happen, not as regularly these days. It does happen. You've got terrorist incursions also in the region. People are nervous about that. Is it business as usual, really?
Absolutely. In fact, we had our team in Mali locked in there basically because of the COVID crisis, and the day after the military coup happened, banks were open and people were moving around as normal. I think the other thing to point out is that Mali is a huge country, so people pretty much paint Mali with one brush, which is everybody's in danger in Mali. But in fact, we're right down in the southern part of the country. We're on the Guinea border. We're very close to the Niger River. We're in that whole Birimian sort of north, south, western sort of zone where all of the mining companies are sitting, and not one mining company over the course of the last 10, 20 years has ever had any issues around extremism, if we can say that. So I think that I've always explained Mali as a country of two halves. You definitely don't want to go north and east of Bamako, but south and west or west of Bamako is like a different country.
Okay. Thanks for that. You're in the Birimian Greenstone Belt, very, very well known. Like I say, a lot of miners, a lot of big names in there, a lot of ounces being produced and have been for a long time. But your grade compared to some of the stuff that other people are mining seems quite low. Surely it can't be that attractive. Why aren't you hitting these sort of 1, 2, and 3 grams that everyone else is?
Yeah, look, I think it could be considered lower grade than some. We don't have the benefit of some of the much higher grades that you see more to the northwest of Mali. We're down in the southern part, the grades are typically a little bit lower, and that almost pulls through into parts of Burkina Faso as well. That being said, grade is okay. We'll feed a gram a ton or more into the process plant for the first 6 years anyway. And I typically think that you can't look at grade on its own. You have to look at all of the components that make up the costs that go together to produce your ounce of gold. And so typically, your one sort of common factor amongst all gold miners is your all-in sustaining cost. And as long as you can defend the components of that and that number's good, it doesn't really matter what your grade is. This is fairly straightforward, simple, free dig mining. It's saprolitic. There's no hard material in there. It flows through the plant very, very easily. It leaches very quickly, 16 hours. You've got 96% recovery. So all of these factors compound to offset what could be seen as a slightly lower grade.
Right. Okay. And what are the other numbers that you're looking at? Like operating costs, clearly, IRR, all of those things. Is that what people should be looking at?
Yeah. Look, I always, typically when I have a look at an operation, I always have a look at the operating cost. That's the number that you have some control over, and you can see whether a project is going to produce positive cash flow or not. IRRs and NPVs, I guess you can manipulate them a little bit and throw a whole lot of high grade in at the front, which typically maybe not happen when you mine. But for me, operating cost is a true number. It's built up from base principles. You know what the reagents are going to be, the cost, how much power you require on the plant, how much labour. So for me, very much operating cost is a key component. NPV and IRR are important. That's another one that people look at. And I think that we've delivered some very compelling NPVs and IRRs, so I'm very comfortable with those numbers. And again, what I think is really important here is that this study was done at $1,530 gold. So I'm not a believer in sticking a great big high gold price number in there and making it look attractive. This is $1,530 gold. It's very, very defendable. Depending upon what your view of the gold price is, the NPVs and IRRs could be significantly higher. But at the same time, on the downside, if you're a little bit bearish about gold, at $1,300 gold, this is still a great project. Any project that's returning you 25% post-tax IRR and more than 100 million NPV at $1,300 gold is a good project, in my opinion.
Yeah, I'd agree. I would agree with that. Can we talk about the business plan then? You've given us some clues there, but you've been in since what, August, September last year, just over a year, right? You had a lot of data because they've been at this a long time, 150,000 meters. You had a lot of data to work with. So tell us what the plan is and how you're going to deliver it.
So clearly the first plan was to deliver this definitive study. And for me, it was important that it was independent. So we used an external company to do that. I wanted something that was something that I would sign off on as the CEO, but also something that would be very defendable in a data room where somebody is looking at it in isolation. But that's done and dusted now. So I guess we tick that box. We've done the definitive study. The next steps are obviously twofold, I guess. We clearly need to go out and raise this money in the market. We have started talking to institutions about that. We don't have a lot of headroom on the equity side, so we started talking to the senior debt providers first. There's been some interest and some uptake, but I guess this year hasn't been great for most financial institutions, so it's been a little bit slower than expected. That being said, we do have a couple of senior facilities having a look at our data room, and obviously then with the other debt providers, whether you can call them mezzanine or hybrid debt providers, there's a whole lot of interest there, and we're engaging with them and talking to them, and we've kept a very open mind about how we structure this whole financing. The nice thing about the company is we don't have any debt, we don't have any NSRs, we don't have any streams or royalties of any sort. So we can be a little bit flexible on how we put a financing package together. My feeling is on the financing side, do you rush into it at very, very high interest rates and regret it later? So what we've decided to do in the interim is, whilst we're going through the motions of talking in a structured way to a lot of these institutions, we've put drills back in the ground. So I guess if you had to have a look at our strategy right now, it's a parallel strategy. I talked a little bit at the beginning about this huge exploration upside. I'm not a geologist. I'm a miner, so I'm not a believer in just poking holes into the ground in the hope you're going to find something. I believe in statistics, so we need to go and find the gold close to where the other gold is. So we've drilled 17 holes already, and we've hit gold in 17 holes, which for me is a pretty good hit rate. And what this exploration program is doing for us is it's giving us an opportunity to expand the resource base quite quickly. We have 575,000 ounces of inferred oxides, shallow, close to surface. that can be easily converted into M&I. If we can convert 300,000 to 400,000 of those, which I believe we can, and turn that into reserves, we're over 1 million ounces of reserve. So that's a nice number to sort of go into the financing with. On top of that, we have 2 very prospective shear zone extensions that we've already started drilling and getting some good results back on. We're also seeing the potential that the grade actually improves as we move to the north of our shear zone areas. So that could be a good opportunity to give us some more flexibility on the overall weighted grade. And ultimately, this is something that will keep us busy whilst we're going through the motions of the financing. I'm not somebody that can sit around twiddling my thumbs, and I think this will continue to deliver some news into the market whilst we're going through that raise.
So that's good news, because I think your dog wants to go for a walk. It's fine.
Can you give me 1 second? I'm going
to Yeah, go on. Danny, just talk to me about the financing again, because there's got to be more to it than the market's tricky at the moment, okay? Because lots of people are getting funded. I don't know so much about the debt side. We've seen a few things, not a lot, but what are they nervous about? Are they nervous about some of the things that we've talked about today?
I think there's a definite possibility of that. I mean, there's no doubt that Mali is Mali. I think there could be a couple of other things as well. There's a potential that the grade is an issue, and we've spoken a little bit about that. If you have a look at the grade in isolation and you're looking at a one-pager on the company or an investor presentation, and grade is one of your tick points, then maybe you would be a little bit unhappy with that as a first glance, perhaps, and it maybe needs a little bit more explanation. I think the other thing about the company is that I've been in just over a year, but this company's been around for a long time, and people in financial markets have long memories. And there's always this trade-off, in my opinion, between companies that continue to tell people they're going to build a mine and they don't build it. So I think over the years, this company, through the drilling program, has delivered a couple of studies, all of saying that they're going to start to build the mine, and then they don't, and they go back and drill it again. And I think that people have long memories. So one of the mandates that I had with the board when I came in was, I said, I'm only coming in here if we can build this thing. That's the first thing, because I'm not a geologist and I don't want to drill for the next 5 years. I'm also a firm believer in, if you've got enough ounces in the ground to deliver a very good feasibility study like ourselves, build it, produce the cash flows, and continue to develop organically with your own cash rather than having to keep going out to the markets to do it. So I think that, in all honesty, it's probably a combination of those 3 things. And it's something that perhaps we have to continue to plug away and work on and communicate and get the message out there that we're a very different company to what it was a year ago, and a very different company to, or a very different project to what was initially envisaged when people looked at these previous studies a long time ago.
We've seen we probably see a company a week who changes its name because they've been through the same process. Why haven't you considered that?
We have, and I've pushed back on it a little bit at the moment because I think that's the easy way out. I think for me, the best way to do this is to get people confident in the management team, get people confident in the board, get people confident with the project, and build those relationships over time that will ultimately end in a deal. I guess, the other thing that maybe is a disadvantage for me is that, as we mentioned, I come out of a large corporate environment. My background is being able to pick up the phone to the head of copper and say, we need to build this project. It's really, it's great IRRs and MPVs, and typically you would get funding quite quickly. I'm not well known in the junior mining market, and it's going to take a little bit of time for me to get my message across and for people to meet me and for us to move forward. But I'm very positive about this. The nice thing is we've got a great project, so it's very difficult to talk about a terrible project. It's very easy to talk about a good project, and it's just about getting the message out there.
Yeah, for sure. But let's look at some of the other issues you're going to come up against. Obviously, market cap, 28 million or so, 28 to 30, we'll call it, okay? you're going to need two types of money to go forward. You've got about two and a half million bucks of cash at the moment, around there, right? So at some point, you're going to need some cash to kind of keep things going because you're spending money on drilling. You're not sitting back and preserving cash. So that's number one. So the cost of that at this level is expensive to you. So you need to drive the share price up. And secondly, the types of conversations, debt guys have with companies of your size, the money gets more and more expensive, right? So
Correct.
I can understand what you say about delaying the decision making with a bit more news and having this dual track strategy, which is one proving up more ounces. That makes a whole bunch of sense. But you must have an idea in your head of what those numbers need to look like before you'll want to get into conversation, and two, you'll have a sensible conversation with any debt providers. Can you give us an idea of what you're thinking?
Yeah, I mean, first of all, I think that we probably should be sitting with a market cap closer to 80 to 100 million Canadian.
Why? Why?
Because if you look at some of our peers in the market that are probably even earlier development than us, a Roscan or someone like that, or Equinox, I think that certainly Roscan, you would see that, at 90 odd million, that's probably the level that we should be at. So once you're at those sorts of numbers, then a whole lot of things kick in. There's a whole bunch of warrants that would be up for exercising. Obviously, then you would have a lot more interest in the stock. So I think that is quite key for us, and I fully agree that we have to get from where we are today to that level. So the question then becomes, well, how do you get there? I think news. I don't know, and maybe I'm a little bit green in this game, but for me, what I would have considered to be very sort of definable milestones in a project like this, which is to deliver a very robust definitive feasibility study, have your permits in place, be ready to build, should be a catalyst really for being able to push that share price quite a bit higher. I guess the problem now is that there's probably less capital around, certainly in the Canadian markets, and people are saying, great, you've got a great study, you've got a project, it looks good, you've got a good team, everything's done, all the boxes are ticked, but you haven't got the finance to build it. So that could be the sort of next catalyst that people are waiting for. And yeah, it does get a little bit frustrating.
No, I can sense the frustration for sure, because it kind of feels like you don't know why people are valuing it here. And I'm like I said right at the beginning, I'm not sure I understand why either, because you've got a lot of the moving parts that you'd want to see in a company like this. Well, okay, so just let's just if we may just talk about what the timing is before, because you've got this $2.5 million, you're going to spend some money on drilling. The question I wanted was, how much drilling do you do? Because you've got 150,000 meters. Surely you can't need any more. To you say, right, okay, we've now kind of got a resource up to what size do you think it needs to be? I'm looking at 1.2 million measured and indicated at the moment. What do you think it needs to look like?
Look, let me take it from the backside. So I'll look at a reserve, because that's what the ounces that come out of it are. So I think that another couple of tick boxes that are quite key here are 10-year mine life, 100,000 ounces, million ounce reserve. So what is very key for me is to get the reserve from the 755,000 ounces up to the million ounces. I'm a firm believer that the drilling campaign that we have in place right now will do that very relatively quickly, and I'm talking within the next few months. And that will, I guess, tick another box. It will also give us a little bit more flexibility on the mine optimization, which will probably be positive for the NPVs and IRRs and cash flows. And I think that just really sort of brings in enough that people say, okay, 10-year mine life, that's an investable product. 100,000 ounces a year, that's pretty good. And then what we do is, whilst we're constructing the mine, we keep drilling. And construction takes 19, 20 months. We know that with 19, 20 months of additional drilling there, that reserve could be 1.2, 1.5 million ounces. And then all of a sudden, you've got something that really is starting to look quite exciting. So for me, I've worked in a number of operations where people drill. As soon as the mine's built, they forget about drilling, and when they wake up, they realise, oh, I've only got 2 or 3 years of life left on this mine. So for me, the replacement of reserves all the time is quite important. So, if I had to break this down into 3 stages, the one is let's drill enough to get 1 million ounces or a little bit more. So that gives us our tick for the 10-year mine life. For the next 2 years of construction, once we have the financing, let's drill some more, because then we're ultimately going to probably add another 200 to 500,000 ounces there based upon what we believe we've got on the property. And then you can take a little bit of a deep breath and say, right, okay, I don't have to go drilling like crazy now. I've got enough to get going, but now I've got some real flexibility in whether I push the mine life out for 15 years, or do I look at a phase 2 on this plant and with your own cash flow build a 120, 150,000 ounce a year producer. So, I think when you've got very prospective exploration areas to drill, at some stage you're going to drill them. We're not going to go and ask investors to put all the money up front to drill for the next 5 years and get to 2 million ounces of reserve. It doesn't do anything in anybody's life. I think people at some stage want to see a return, and they want to see some gold coming out of this thing. So I think we've got enough to get going. The study shows that. I think a million ounces is a better number. It ticks another box, and potentially that could be at slightly higher grade. Then we just keep drilling as we move on. And if you can drill enough to replace the 100,000 ounces a year, then you just extend the mine life by a year every year. And that's a nice sort of model to use, I guess.
Okay. So with people in your data room at the moment, are you confident you will get this thing financed sometime soon?
I'll answer it in 2 parts. I'm confident that we'll get it financed. The sometime soon is, I'm not sure what that sometime soon is. I mean, I'm just thinking timing wise. We're getting towards the end of the year now. I think everyone's pretty tired. So would I think that we would get it financed by first quarter next year? I think we've got quite a good chance about that. That would be good timing for us. It would give us time to finish all of the sort of pre-construction works like ordering of long lead items, finishing detailed design and things like that, and then lead into earthworks. So I think timing-wise, if it's any time in the first half of next year, that's great timing for us.
Okay, brilliant. Danny, thank you so much for running through that. We've not spoken before. Good luck with the fundraise. Wish you well with that one. Let us know how you get on. Stay in touch, okay?
No, I'll do that. Thanks a lot. And thanks for your time. Appreciate it.